Every goal I've ever hit has not changed how happy I am. You know, it's a moment and you've got to be happy now. This business can stress you out, right? You got to work hard at home just like you do at work. They had to wake me up with smelling salts. I knew it right away. For 2 weeks, I thought my life was ruined. You know, sometimes you don't know. This is not a normal thing. I did not go out and buy a Lambo. And I was like, oh my Lord, I'll be a millionaire just if I never bought another house again. If you would have seen me in Jamaica, I mean, it was like what's delusional versus what's attainable. And I was cheating on my passion. I wasn't sure I'd get there this quick. He asked me the question, he goes, what is your worst case scenario? And I said, I won't make any money. And as soon as I said that, break even was my worst case. I'm like, I have to do it. Yeah, I'm gonna get in trouble for this, but.
We're back with another episode of the Fundication Show. My name is Kalani Michelle, and I am here with my co-host, Christian Sadler.
Hey, everybody.
And we have a special guest today, Dan Costantino.
Thanks for having me.
Thanks for joining us, Dan.
Absolutely.
Dan, based off of what you've seen online so far, I know this is your first time in the studio.
Yes.
I know that we're newly acquainted.
Yep.
What do you know about PREIshare so far?
I know that you guys fill a lot of spots in the syndication world, you know, especially for operators, to help them do raises, top-off services, providing equity if you go over CapEx budgets, which often happens, and a lot of other great things, and really connecting accredited investors with the right operators.
Yes.
And I want to ask that in a different way, Dan. If you could, if somebody came to you and they wanted you to explain what PREIshare is, how would you say it in your own words to help them understand it?
You know, I would call it a marketplace that would connect, you know, busy investors that don't have time to really vet operators. So you have that marketplace, and also from a operator standpoint and a syndicator standpoint, you know, just providing some great funding sources that really don't always work in the marketplace now.
Yeah.
And why do you think something like this has not been created yet?
Man, real estate in general is just very decentralized, and there's a lot of hustlers out there, right? So they just figure out their way to do it. It's not as you see the big institutions obviously descending. I mean, they're part of this world, but there's so much decentralization out there. How many mom and pop owners of buildings that are worth tens or hundreds of millions of dollars are out there? I mean, they're out there all over the place. It's very decentralized, so it's hard. It's like it's very hard to organize something like that sometimes.
I think it's difficult for somebody to think about the other person's interest when they're focusing on their own goals, their own needs, right? And so I think that, from my perspective anyways, is why maybe this hasn't come about. From everything that you do know about what PREIshare offers, is there a specific aspect that appeals to you the most as an operator?
I would love to find out more about, you know, how you provide equity to syndicators that are further down the line to help with CapEx and stuff like that. That would be something that would be interesting for me to find out more about.
Yeah, and our approved sponsor, so we have a PREIshare approved sponsor group that's currently limited to 50 sponsors around the US, and that's where we provide those additional services. So we're happy to give you more information on that. If you're watching right now and you're interested in learning more about our PREIshare approved sponsor program, go to preishare.com/approved sponsor or visit the link on the screen. Dan, before we really dive into the meat of this, tell the audience a little bit more about who you are. I know before we started filming, you said you're just a guy from Pittsburgh, Pennsylvania, but there's more to you. So would love for you to, you know, let us know and let our audience know a little bit more about you and your experience in real estate.
Very good. I grew up in the inner city of Pittsburgh. Never dreamed of owning any real estate at all. It just was never something that we talked about as a family or anything like that. I was fortunate enough to have actually a tennis coach of all people. He was a freshman counselor, and he encouraged me to go to a specific school. Like, we were kind of programmed that you go to community college and just have a regular life. And he inspired me to go to a normal college. I went to Robert Morris College out there by the airport in Pittsburgh. And I worked my butt off because I was so afraid to fail, and got like a 3.7, which was a better GPA than I graduated high school with, and started to believe in myself a little bit more. College put me in a different um, group, to be quite frank. Just was, people talked differently and spoke about more things about success, becoming successful. I mean, there was just things that I had never been exposed to because my group was so small in the city. There were parts of the city that I had never been to, just because we kind of stayed to our little area of the city. Anyway, got a great internship at a Fortune 500 company, Roadway Express, that really changed my life. Again, college changed my group. Getting into a large corporation like that, ISO certified, exposed me to a whole new set of people that was opening up my horizons. And really, there were so many different things that I learned from that organization, discipline, and then also just networking. Right? They brought me to golf events because I was a sales intern. So I'd go to country clubs, and there was a story I like to tell. We went to a country club that isn't far from where we grew up. It was maybe 20, 25 minutes away. I had never seen that many nice houses in my life. And it kind of put a chip on my shoulder. I was almost like, why don't I even know this exists? I had no idea what that many people did. I'm like, they can't all be doctors and lawyers, right? And I thought they should make a law that you should have their occupation on their mailbox, because I just couldn't comprehend it. Anyway, so I just started to learn about business. I was in sales, in logistics and trucking. So I got to go around and basically interview. I had to go solicit, them to ship with our shipping company, trucking company. But I got to go interview so many different people in procurement departments, sales departments, shipping departments, and really learn about distributors and manufacturing and learn about how business worked. And that opened my mindset quite a bit. So got into logistics, had about 15 years, was always a top sales rep. Did a lot of cool things in there. Got to go over to Asia when we sold international for freight forwarding. Got exposed to the international market over there. It was great. And then as you start to become successful in sales, they start messing with your commissions. And salespeople aren't always the best employees. So you start to get a little cocky after you get some success. And I started looking at side hustle things. Went to a success conference, and someone mentioned Rich Dad Poor Dad. I read that, and it got my wheels spinning. So I actually started to trade options for 2 years before I got into real estate, and basically broke even. I'm too emotional for trading options. So got into real estate, flipped my first house in 2013, and it was kind of over from there. I almost walked away from that deal the day before. I got cold feet, but went through with it, made 27 grand on my first flip, and kind of got hooked from there.
You just did a social media post about that.
I did.
I read that post.
Did.
Yeah.
So
Yeah. Go ahead.
Well, I would love to hear about, first deal is always kind of a big thing. And we talk about this a lot in real estate, is, kind of that breaking that ice and really getting that exposure into the industry. Go into a little more detail there. Why were you thinking about walking away? Why did you decide to stay in it? And how did you ultimately turn a profit?
I had paid for some education. Like, I like to pay for speed. So I was educated on it. But I just got in my own head. There were a couple things that I just wasn't quite sure about. I was not handy. I don't fix anything. I make the address plaques on our properties. That's about the only thing I do. But the repairs, I just wasn't confident in myself. I just lost confidence through the due diligence period. There was a crack in the foundation that scared me. It ended up not being that big of a deal. I think it was like less than a $5,000 fix, to be honest, but it scared me. So I did get my stepdad involved, and he came out the day before. I was trying to do it on my own. And I said, look, I just don't feel confident. I'm going to walk away from 5,000. Can you come over? So he came over. I didn't tell him my repair budget number. I said, you tell me what you think it would cost to get this done. We were within $5 grand. And he asked me the question. He goes, what is your worst case scenario? And I said, I won't make any money. And as soon as I said that, break even was my worst case. I'm like, I have to do it. He's like, well, you have your answer. So I went through with it. I mean, I told the realtor and everything I was going to walk away, and went through with it. And it was one of the more efficient flips I have ever done, because same thing like when I went to college, I had the best semester ever. I just ran scared, but I was already prepared. I think I posted all the documents and due diligence that I did to prepare me for that flip And I was probably more disciplined than most people out there. I did know what I was doing. I just was afraid to take the leap. I'm glad I did.
And what is the story from that point forward? I mean, going from flipping houses to real estate syndications is a pretty big leap. What's the what's the process along the way?
I think my goal was just to side hustle some flips, do a couple flips a year, maybe make 100 grand a year. That was really my goal. I never intended to be a landlord by any stretch. But as you're hunting for deals, sometimes they don't fit as a flip. The numbers don't make sense as a flip, but there was a lot of good real estate. This was still coming out of 2008, 2009. You could still find good deals that made sense from a rental standpoint. Rent rates were decent, but housing prices were still low at that point. So I was just, I was maybe going to flip some houses, signed up keeping them. And then one day I had, I think, 8 or 10 units at the time. I just did a simple spreadsheet, modeled out 3% appreciation. And I was like, oh my Lord, I'll be a millionaire just if I never bought another house again. And I used to have passwords that were $2 million. Like that was my goal, because I would have been the richest person that I grew up around. And I laugh at that. And I told that story to a good friend in my Apex group. And she's like, you need to change your password. And that means reprogramming your mind. That's why I always have the tagline, no finish line, because I've always set goals and I've always achieved them. And it's how far do you go? Like what's delusional versus what's attainable? Sometimes you don't know.
Well, and now those houses by the country club
Yeah.
weren't so far off, were they?
Oh no, not at all. Not at all. It's really funny. It's come full circle. But the transition was slow. Like I said, flipping houses, just acquiring some rentals. It took me 5 years to get 30 units. And then at that point, it just wasn't working anymore from a standpoint. It was so busy. I had to get outside. I was self-managing through that period. I did get outside management, which I didn't like. I like to have control. So we're vertically integrated. We built our own property management team and construction team since then. But it was just getting hard. I couldn't break away from work to go look at the properties that I knew I needed to go look at. I couldn't do a very good job at work. So I like to say I was cheating on both things. I was cheating on my job. I wasn't doing a great job the last year for sure. And I was cheating on my passion, which became real estate. And I knew that that's the way I wanted to go. So talked to my wife. She was more supportive than I could have ever asked for. And I don't know if I would have ended up quitting my career if she wasn't supportive, but she was fully supportive. Quit my job at the end of 2018 and had 2 flips like lined up. I wasn't stupid. I didn't just one day go in and quit. Had 2 very good flips lined up that I knew I could have a good year in 2019, and it worked out.
And at that time, were you still in corporate sales?
Yeah, I was in sales through 2018, so almost 18-year career. 5 years in side hustling real estate was really what happened. And it was nice being in sales because you have I always say, sales is the best quality of life that there is, I think, in the world of business, because especially outside sales, because I was able to go out on the road every day. I looked at houses almost every day, or did some project management. I'm sure my old bosses wouldn't like. Actually, one of my old bosses, one of my biggest lenders at this point.
Yeah. Well, Dan, you were looking at houses on your way to an
Sales
appointment.
call.
Yes,
Yeah.
exactly. Or while you're on a sales call, you're driving around looking at houses.
Yep.
Well, and
Every day.
I think that sales is one of the most important skills to have in life in general, let alone in business. What is it that drew you to sales in the first place? Because it seems like you went right from college into a sales internship. What drew you in that direction?
I had a really good class in college with some professors. I always thought of used car salesmen when it came to sales. I promise you, growing up, I was never like, oh, man, I want to get into sales. Had a really good, a couple good professors that taught us emotional intelligence in a sales class. I'm like, this isn't as scummy as I thought. And then the internship is just I wasn't looking for it. That's just what it was, a sales intern, because I was a marketing major. I always thought I'd be more in the creative aspect of marketing and putting together pitches and stuff like that. Sales is what came to me, and that internship was phenomenal. I mean, we had some fun. I mean, we took people to Steeler games and Pirate games, and I mean, it kind of drew me in. So just experiencing it is what drew me to sales. But the lessons and being able to relate to people and trying to break down those barriers quickly has been invaluable to me.
And transitioning to going full-time in real estate, did you have some benchmarks for yourself that you felt like you needed to hit? Did you work that out with your wife, or did she kind of have some requirements of this is the safety net that, she needed to feel comfortable with? Where did that fit?
Man, I'm going to get in trouble for this, but as long as she can order Amazon packages, she's good. So she's not a KPI person from a money standpoint. I just know that I had to be able to replace my income pretty quick. The flips that I had, I knew I could get pretty close to that. I mean, if I had two right out the gate for 2019, I knew I could acquire more flips, and we did very well in 2019. And but we went from 30, I think, to 50 or 60 rental units. Like we acquired a decent amount of rental units that year as well, and did that through some partnerships. Like we were doing some hard money lending at the time, so I had a lot of people bringing me deals that they couldn't refinance out of for whatever reason, credit or background. So I was very solid. I was still riding the coattails of my W-2 and tax returns. That was also strategic. I quit in December of 2018 so I could have full year of W-2 and tax returns to still acquire and get good bank financing. So yeah, I didn't have any firm numbers that I wanted to hit. I just knew I needed to replace my income so that my family was safe. So that was the initial goal. Now we have much bigger goals, but I don't think I ever saw myself having. We have 630 units that we are GP on or own. I wasn't sure I'd get there this quick.
Yeah, and that's, I mean, you from 2018 to now 2023, 5 years, you went from 30 units to now 630.
Yep. And that's us selling 40 last year. It's
Where
been a
where
ride.
did the transition come from single family homes to syndications?
Studying. So I knew this is a direction I wanted to go. I was starting to fall in love with the smaller, I call them smaller multis. So 4 units, 8 units, 12 units. I started to fall in love with those buildings and got good at managing those, got good at doing the value add and the lease up and all that stuff on a smaller scale. And went to a mastermind, joined a mastermind about 3 years ago, and studied for pretty close to a year and a half on how to put together syndication and manage big turnaround projects like this. And I just told everyone I knew that I was looking for apartment buildings that were 100 units and above. And I always like to say focus is a superpower. If you don't know what you're looking at, and I've done subject to purchases, I've done owner finance, single families, I've done single family rentals, I've done the small multis, I've done wholesaling. Like I've tested all of that. But the problem with that is you're not focused and no one knows what to bring you for deals. When I started to get real intentional about hard money and multifamily, deals started to come to me. And someone brought me my first opportunity at the portfolio, which was it was 500 units. We pared it down to 305 units. And I worked that thing for 6 or 7 months, and we pulled it off. I wasn't sure we could close. Like I didn't know we could close until the day before. So that was quite a ride. But yeah, I mean, I actually went over 100. My goal was to get 100 units. We went over 100 units in 2021, and then we bought 305 units. So we actually went from 81 at the beginning of 2021 to 417, I think it was, at the end of the year. That was a wild ride.
That's some real big leaps as far as wealth and also management.
Yeah.
What are some of the challenges you've been running into with making that transition?
Well, that was raising money was quite a challenge. I wasn't real sure what to expect there. We did it obviously, but it was a battle. I brought in someone that could help me with the liquidity on the sponsor side of things. He was my GP partner. He was going to raise the whole. We had to raise $5 million. He was going to raise the whole $5 million, and we stalled out. So I had to jump in and hit up my network. And we were going to Jamaica as a family the week before closing, and I was literally on Zoom calls every day. And actually, 2 weeks before we closed, I was at my mastermind, and I told one of the chief investment officer, I'm like, we got 2.5 weeks. I'm not sure we're going to be able to raise the money. He's like, you'll do it. Like, you seem a lot more confident than me. I walked away like, what do you see that I don't? I was pretty scared at the time. Anyway, I hit the Zoom and I had literally 2 or 3 Zoom calls every single day in Jamaica. I just apologized to my wife beforehand. I'm like, I'm going to work a lot this. I said, you guys have a good time. I'm going to work a lot. And she worked with me and we did pull it off. It literally got the last wire. I think we wired the money over to the settlement company 40 minutes before closing. Like it was a lot. So that was that. So getting to close was a challenge. And then I did not hire any more people, any more support people, because I didn't know if I could close. So that was a challenge. So we went from 100 some units to, 4 something. It was December was a very tough month.
Which one was your first syndication? Was it like smaller, like 4A unit, or was it this $5 million asset?
It was an $18 million purchase.
Oh, the 8. Okay, that
Yeah,
was your
we-
first one.
Yeah, we went
Oh
hard.
my goodness.
We went hard in the paint on the first one. So that was the first syndication for sure. Like I said, we raised $5 million in equity on it. Had a good chunk set aside for CapEx and things like that. Never enough, always need more CapEx. But yeah, it was challenging taking on that many units, and it was a bad operator previously. I would be comfortable calling it slumlord. Yeah, did not put any money back into the properties, and we felt the effects of that for sure. I probably underestimated that a lot.
So you inherited a lot of somebody else's problems.
Yeah.
And it sounds like you weren't properly prepared staff-wise. What are some of the things that you did to bring it up to speed?
Luckily, I had a good team, right, that was very dedicated. I mean, we worked nonstop December trying to figure out what was going on, because I just looked at a report recently, and we of all the tenants we inherited, 92 are gone, either through mostly evictions or just have moved out. That happens in the apartment space. I went hard. We had to operate what we could and get the maintenance under control. It was very tough at first, but we had good processes in place and everything, and it was a lot of fortitude. But it was frustration. I almost lost some good people because it was so hard that first week. But we hired people. From day one, I was trying to hire people. We hired a project manager that knew the area very well, had a lot of connections. He helped out quite a bit. My vendors, who I treat very well, all stepped up for me and helped fill in gaps to where we needed them on emergency calls and things like that. So I'm very blessed. Being in sales, you value. I'm a relationships type guy from a sales standpoint. I'm not a cold caller. I'm not that persuasive cold caller. That's not me. I do build good relationships, and that includes vendors, and that really helped us out quite a bit as we transition. Then we just got our feet under, we got our legs under us, and we're running pretty smooth now.
Yeah. So as a syndicator, what are some of your core values?
As a syndicator in general, like, teamwork's the biggest thing. We do the right thing is like probably the second for me. I always like to say, what you do in the dark or when no one's looking is who you really are. So that's huge. And accountability is another big thing. And that's we've implemented EOS. Accountability is a big part of that. I think I saw a saying, your I can is a lot more valuable than your IQ, right? And we're not a big company. I mean, we have 22-ish employees in Pittsburgh, and we have about 5 or 6 VAs that help us from the accounting collection standpoint. Like, it's not a big team, but you need that accountability there and everyone pulling their weight. I was a rower in college, and if you have one person that is not rowing at the same cadence and the same pressure as everyone else, you're either going to spin in circles or you're going to crab and flip the boat. So we use that analogy quite a bit, but yeah.
Since that $18 million asset that we just talked about, 305 units, right? What else has come since then?
Well, I mentioned that we hired a project manager, and he was tied into the community. He used to be a cop in the community and knew pretty much everyone in all the areas that we were in. He lived at another apartment complex and had befriended the property manager. They were a co-op, meaning 24 shareholders owned this community. It was an old military housing complex, to be honest. And he was like, would you want to buy another asset? I'm like, yeah, this is exactly what we're looking for. What do you got? And he said, it's 258 units. Set up a meeting. And it took us a few months of, negotiating, building relationships with the co-op, because they live there. Half of them live there or had inherited their shares. Their parents lived there. So they were emotional about it. But he had told me how much they wanted, and it was very doable. We actually bought 258 units on 127 acres for $18,000 a unit, which is, yeah, it's pretty good. So hard to mess that up. But yeah, it definitely needs a lot of capital expenditures and everything, but $18,000 a unit was a no-brainer for us. So we bought that asset in August of 2022. And the first deal absolutely prepared us for this. The due diligence side of things, the financial side of things, being able to really peel back the onion and make sure that we mitigate all that risk. We walked every single unit. We documented everything on Company Cam is one we use. So we had pictures of every unit so we can go back and refer to. We got some budgets done for the renovations beforehand. So it just prepared us a lot more, and the capital raise was so much easier because we had gone through that process the first time. So we raised $3.5 million on this deal, and we did it really within weeks. So just having that experience and the confidence in ourselves and having the team, we were prepared for this from a operational standpoint and an employee standpoint. It was a pretty easy transition. This was 20 minutes down the road from our other office. So geographically, like, this fit really well within our portfolio. So we already had the maintenance and all that team set up. We just had to move over 20 minutes and set up shop there. And it already had an outbuilding that was a management office, a warehouse. I'm not sure how many square feet the warehouse is, but it was pretty substantial. They have 2 trucks. I mean, they had really good infrastructure out there for us.
Wow. Now, I've seen some of these military buildings. You said military, right? Was it like a barracks?
They're all townhouses, like 2 to 6 unit townhouses. So I've never called it that, but it might be. But it's a big circle, and there's 66 buildings of townhouse apartments. So it's pretty cool area. It's real on a hill. It's right by the river, so you can get some. I put my drone up and taken some really nice scenic shots. So it's a pretty awesome community. It looks really nice.
Well, some of these that I've seen, and it sounds like this one's nicer, but they're pretty bare bones. So you said you had to spend quite a bit in CapEx?
We've spent, I think we've spent $1.5 million already in CapEx.
So you had to do quite a bit of improvement?
Yeah, a lot of them are going to require full plumbing, full electric. It's interesting. So I'm based in Pittsburgh. This is one county over. Very different rules. Like in Pittsburgh, the construction would take a lot more red tape to get through. Out there, it's pretty open. They're like, looks like you're doing everything good.
Yeah.
Like, this is approved. So, I mean, that's really how it's been. I mean, we've had the inspector out there, we've had the mayor out there, and we're building a relationship with there. We just did the Earth Day cleanup. So we were out there with the borough cleaning up for Earth Day cleanup. So really, it's given us some economies of scale in the county, because we have 550 units in this county. That had a really big construction project. I think it was the biggest construction project in North America. There's a marathon of a Shell cracker plant that was built out there, that they crack ethane, and a lot of plastics manufacturers are expected to. It's good growth for the area. But we're going to be a big part of that, I think. And my goal, my job, is to build those better relationships with the politicians around there and get more intertwined with the community. We weren't popular in there because they were $300 to $400 rents whenever we took over. That is not going to work. It didn't work for them. We've already replaced, I think, 40 of the 66 roofs in the community. So it needed a lot. It would not have been sustainable. Like, they would have had to demolish that community at some point if it had still gone the direction that it was headed. So.
And sometimes you're painted in that ugly light, right? When you're making changes, but ultimately those changes are actually to better the community. Sounds like you're very focused in one specific geographical area. Can you talk about some of the pros and cons that you feel like come from being there?
So just my background, right? I I was a logistician, as I like to call it. So I was in logistics for all that time. Didn't have really that background in real estate, but I've built that up over the last 10 years. I like to say people tell you how to, or teach you how to buy real estate. They don't teach you how to keep it. Operations is huge, as you know. So you guys know that from a syndicator standpoint. Having all of our resources in one area is really, really big. So we had about 100 some units in the Pittsburgh area. Um, that is all stabilized and kind of running very smoothly. We've shifted the focus over to Beaver County, which is the county next to it. So all of our resources are out there. It enables us to do unit turns more efficiently. All of our vendors know the properties. Like there's so many benefits to being able to operate this thing. These are turnaround projects. The operators were not keeping up with the CapEx that needed to happen on these properties. So having all of our resources focused on these two big turnaround projects has been invaluable. I don't know how you would do it otherwise. I can't imagine outsourcing turnaround projects. Like there's so much to it. I mean, we have daily stand-ups in property management going over leasing. We talk about the KPIs we implemented EOS, as I may have mentioned before, where we track KPIs for work orders, maintenance calls, and all that stuff. The operations is huge. So being focused on one area is obviously beneficial.
For someone that doesn't understand EOS or some of these terms, can you break them down for them?
Sure. Entrepreneur Operating System was generated by Gino Wickman. And long story short, it's just a great way to focus efforts. I had close to 20 people all working very hard, but in different ways. You know, maintenance wasn't necessarily talking to property management. Property management wasn't, at that time we had leasing kind of split off. They weren't talking enough. So it was very decentralized, hardworking effort. And we go back to the rowing boat, like not everyone was rowing at the same cadence or with the same power. And now we have Mondays are pretty much dedicated to going over the biggest issues that we have, tracking our KPIs on a weekly basis, so we know where everyone's at, and we're holding people accountable. And if they're falling behind, like everyone knows, so it gets people aligned pretty quickly. But we're able to address issues as a management team, and it's just a lot more efficient than getting calls all day in and out. So it's been huge. We have an implementer that comes in quarterly. We go over our goals. We go over our what we call rocks, and those are the things that we set as quarterly objectives that will move the company forward. So it's been a game changer for us for sure. We make it work for us. We don't necessarily stick to the textbook way of doing EOS. It's a tool for us to stay organized and keep driving the company forward, though.
We want to dive more into some of the things on operations side, such as, risk management for newer investors. Before we get to that though, and before we move past the asset that you were just talking about that's in the opportunity zone, can you tell the audience right now, like what are some of the benefits of choosing and purchasing an asset in an opportunity zone?
Sure. The opportunity zone was not even in my mind whenever I got this property under contract. Really, at 18 grand a unit, I just said to myself, you can't lose. I was doing my pitch to some of the investors that ultimately invested, and one of my mentors told me, he's like, do you know what you have here? So we were already in the process of setting up our syndication. We were not set up for actually putting in a qualified opportunity fund that could invest into a qualified opportunity zone business. So we weren't set up properly. So we had to scramble during the paperwork process to get set up. But there's huge benefits. Number one, you can defer taxes for capital gains. And I want to put this out here because I did so much research prior to purchase. I thought that everyone would get the same tax advantages. It is just for the people that are investing capital gains. So for people investing capital gains, they can defer their gains through the end of, I believe, 2026. But if we hold on to this property for 10 years, they get a step up in basis, meaning if we sell, so we bought this for 4.6 million. If we sell this for 20 million, which I believe this will be over a $20 million asset, their basis will be the fair market value at that time. So they'll pay no capital gains on that for the people that invested capital gains. In addition to that, there will be no depreciation recapture. So we're depreciating. We did a cost segregation study and everything. They won't repay any of the there's no depreciation recapture. So huge benefits for people that are playing with capital gains money. And thankfully, we're able to find some people that could take advantage of those things, but they're very excited about it.
Was it harder to raise funds for this syndication than the one that was the $18 million asset?
No, that first one was tough. And listen, everyone told me the first one is always going to be your toughest. This was very simple. We had a lot of interest in it, and we had our stuff together on this one for sure. And we were getting it at such a good price. There was a realtor that was local that doesn't like the area. You know, it's more of a depressed area. That's why it's an opportunity zone. And she said, I just wouldn't buy there. I said, what price would entice you to buy there? And she goes, $30,000 a unit. I'm like, great, I got it for 18. It was like, I'll wholesale it to you, which didn't happen. But no, it's just the economics of it. But yeah, the raise was pretty easy on this one.
So with those opportunity zones, and they're obviously to spur the economy in that area, what are some of the challenges that come with that? I mean, do you have more unemployment rates or things of that nature? And how do you feel like you overcome that? Is it simply the price that you got it at that made it worthwhile?
Yeah, great question. I mean, it's definitely more of a depressed area. There's higher unemployment. There's lower income for sure. So like, if we list something in Allegheny County, Pittsburgh, I can get 30 applicants. I mean, it's like shooting fish in a barrel. I mean, it's so simple to get renters in Allegheny County that are qualified. In Beaver County, you have to do a lot more screening. People lie to you. That's why you have to screen everyone. So we look everyone's record up. We do full background checks is huge. One of the biggest reasons Pittsburgh, I can kind of run that it's on autopilot for the most part, is because we've done a good job screening. COVID was not an issue for us. Now we only had 150 units, I think, at the time. We really only had 2 or 3 tenants that were issues. I mean, it was pretty impressive. All these other people were having, 20, 30% delinquency rates. We hardly had any of that. Now, the first syndication we bought, we had to inherit all that. We had to get rid of a lot of people. But screening is one of our strengths, I would say, on tenant selection. So it's harder to find good qualified candidates for sure. You guys have probably heard of that train derailment that happened in Eastern Ohio. I don't know if you heard about that. It was a pretty big deal that there's chemicals that were released. Anyway, we've been getting a lot of tenants from Eastern Ohio because we're pretty close to the border. So we've learned how to market to other areas that are in proximity, but not necessarily what you would think to market to. And that's helped us put more qualified people in. But once we get units ready, it's pretty easy to rent them. We just have to show it a lot more than we would a Pittsburgh unit.
Got it. And so if screening you feel like is really one of your highlights and strong suits, what advice can you give to another operator who, maybe needs some help in that area?
The biggest thing is, have it all documented what your requirements are. We require 3 times monthly rent. Credit score, I will say we get a little, we don't always hold to a firm number as long as we can tell a story, as long as we don't. The credit reports tell behavior, right? So I don't really care what the score is. I just want to see what is not being paid to see what the behavior looks like. And then criminal background. If there's any violent crimes or anything like that, we pretty much stay away from that. We have to, abide by the fair housing laws and all that stuff. So my property managers are better at that than I am. But ultimately, there's so many landlords out there that I see that we lose tenants, right? Just by natural attrition. We hardly ever get landlord references called. Like there's a lot of people out there putting people in apartments or houses, and they don't even call us to do a background check or a reference check. So it's just being disciplined on it and making sure that it goes through. Either the leasing person or the property manager has to go to the director of operations. If they're iffy on it, they'll come to me on it. So it's just having those rules in place.
Got it. Well, I'd love to shift topics a little bit. You've mentioned that you lend hard money a couple of times, and it sounded like you were doing that pretty early in your career. How did you get into the hard money lending side, and how much of that is a part of your business now?
It's a bigger focus for sure. I started out, one of my lenders was lending out, and I had a self-directed IRA at the time that I was flipping, but I didn't like flipping in the self-directed IRA. It was really messy. So I had an old 401k or IRA from a previous employer. I rolled that over to a self-directed. that was where I had some money. So I did a couple flips in the self-directed IRA, and he had asked me to participate on a deal to fill in some funds with him. So I lent with him. We were both on the mortgage and note. And that was how I got introduced to lending as opposed to just borrowing. And did that a couple times, and then I started lending on my own. And now he lends through me, 8 or 9 years later. But I had started to get so many people that wanted to work with me that I had more money than deals at the time, because it was starting to get harder and harder to find good flips or BRRRR opportunities. So I started lending to other investors, and it just kind of snowballed, and we just clicked over 20 million that we've originated, and most of that's been within the past 3 or 4 years. But we do all that. We did all that with between $2.5 and $4 million. I think we have about $4 million in promissory notes to other people. So it's a lot of fun. I love getting involved with other people's deals and winning together, right? These talented people out there are finding the deals, they're operating the deals. I get to go in there. I've been kind of a mentor to some of the younger investors, and it's a lot of fun. And we make money in the process of it. They make money. We've had I shouldn't say a lot, but we've had a few investors just really say, like, you've changed our life because you've helped us open our mind up to not just operating with our own cash and only doing 1 deal at a time or 2 deals at a time. Now we can do 3 or 4 at a time and really make an impact on our family.
Yeah. And how do you structure your money there in order to make sure that you are protected and still giving them the opportunity in the hand up, so to speak?
Sure. So we will lend up to 70% of after repair value. We're in first lien position. We make sure that we're insured properly. And that's a big thing. I think that's one of the biggest risks in real estate, is not being insured properly. We just lent on a deal that a guy needed money on an Airbnb that was completed. It's a $650,000 house. He only needed $150,000, so the loan to value was stupid. I mean, if he defaults, God, we'll be okay. But he sent me over an insurance policy that was, as if he was living there, and we can recognize that. So sent it back to their insurance agent, confirmed that this would not cover renters or certainly short-term rentals. They got the right policy, and we funded the deal. But we wouldn't fund that deal before making sure that the insurance was out there. We also this was not a renovation. Typically they are renovations. We make them fill out a scope of work, and then we disperse draws. We only give them up to 100% of the purchase price, and we'll give 100% of the renovation cost, but they have to put in the work, and then we reimburse them. So they have to add value to the property to justify it. So we don't just give them all the rehab money up front. They can go to Punta Cana or whatever, but so that's how we protect the money. So being in first position lien, being listed on the insurance as the mortgagee, and then also managing the borrower with the draws is super important. That's probably the biggest important aspect about keeping the money safe.
Jumping back to syndications, how did you structure your deals?
So we did 506B syndications, the exemption. So we did friends and family. And that was just because we felt like we had enough people that were interested in investing with us with this first deal that we could do that. And again, the second deal really followed suit. I knew I could do that with just friends and family. Wanted to get them. I mean, there were people that they were like, we want in on your next deal. So why not do the friends and family? And it was an easy raise anyway. The second time around. The first time was obviously a little more challenging. But I had my GP partner raising money from his friends and family, and then I also stepped in and raised money from my friends and family as well. So we did the 506B approach. Next syndication, the next one we will, I actually learned this recently, where you can start out as a 506B, but transition to a 506C during the raise process. So you can get in your friends and family that may or may not be accredited investors, and then switch over to 506C and blast it out and advertise and solicit that way. So that'll be how I do the next one. But we did a GP-LP structure. The first one, we kept a majority of the equity. The first one, we were actually 75% on the GP side, 25% to the LPs. The second one, we went 65 to the GPs, 35% to the LPs. I know this is inverse of what most syndications are, but that was really how we were taught to do it, and that's how it played out. Now, one of where that comes into play is if the project ever needs capital, which the first one pretty much does, like, we own a pretty good amount of equity that we can dilute ourselves, and that's really, we can keep control that way. So we can dilute ourselves at any times without doing capital calls on our investors, which I've had feedback from investors, like that's their biggest fear is like, are you going to do a capital call on us? So we've never done one, but obviously that's a lever we don't want to pull.
Yeah, and that's where our pref equity with our approved sponsor program can be beneficial for sponsors, so they don't have to do those calls.
We'll have to chat about it.
So with that, I mean, knowing that you're doing a 506B, you had to have the prior established relationship. It kind of sounds like you were relying on somebody else's network on the first one. How did you know who to go to in your network, and what were the ways that you approached them?
I mean, a lot of them were already lenders to me on the private money side that we were doing for hard money. So some of them came to the table and helped us out or participated. I mean, we help find good deals, right? So we help each other out. We bring them good deals to invest in, and they help us out with some capital. But I did not intend to be the one raising the capital. I just beat the phones and Zooms, and we went a little bit further in the Rolodex, but these were all people that were in my network. That's where reputation really rears its head, right? So I have been in business for, at that point, 20 years, and those relationships really helped me out when we needed it the most. So reputation's everything, and had some good mentors, in life, but also, throughout my career, and that relationship sales aspect really benefited me on the capital raise.
Yeah.
So Dan, I want to dig just a little bit deeper, and if you will share this. So I had a conversation with a sponsor about 2 months ago, and he currently has an open deal, and he's raising funds. And he said, "How can I find more accredited investors?" So just to be a little more specific with the strategy, I mean, were you texting people that you maybe knew might be interested? Was it social media, like sending messages on Facebook to people? Was it maybe sending emails to friends and family and people that were in your network? Like, what exactly did you do to get to even like schedule those Zoom calls that you had?
Yeah. Thank you for clarifying. Yes, it was guerrilla. It was guerrilla force. A lot of text messages. Social media has been huge. I've been doing that since I joined Apex 3 or 4 years ago. That's a mastermind that I joined, and a lot of that was pushing you out of your comfort zone and putting yourself out there. I don't love posting, to be very honest, but I like to put my story out there because I understand what the benefits are. I've had old customers that I called on from my sales days. I met with them maybe one time. They were following me. I never even knew it on LinkedIn. Like, I had a CFO of a company, a big company, reach out to me. "Hey, I've been following you. Want to get involved in a deal." Now he's in on that opportunity zone deal, and we've done a few other projects as well. And social media was the main driver behind that. So posting is important. If you're going to be raising capital, people need to understand what you're doing. You need to put your story out there. You need to be somewhat vulnerable. Yeah, I put out some polished stuff, but I also put out my real story and how we got to where we're at. It's certainly not perfect. But social media was a big part of that. But I did text some old business associates and friends and family for sure. I mean, it was anything I could do. I mean, it was text messages, social media, DMs, whatever the case may be. And then I was doing the Zooms. I was going over the pitch deck and the financial model.
Okay, now I have 2 more questions on this.
Please.
I know we're digging deep here.
Yeah.
So with this being a 506B, how did you post about it on social media? That's one of the questions.
I didn't post about it because I knew I couldn't. So thank you for clarifying. But they knew I was doing deals, right? So that, again, it was direct messages for the most part. So yeah, I did not advertise or solicit online because I know that's a taboo. Thankfully, my mastermind taught me that. But yeah, I mean, I mainly texted and DM people and phone calls. But my partner raised, I think, the majority of the money, and then we had one person bring in $1 million, so that was helpful. I'd have a $5 million raise, and then it was just brute force on the first time. The second time around, like, I'll say this, there's groups in Facebook that are closed that are all your friends. Like I definitely put it out there that we had the opportunity zone opportunity for them to invest in. So that did help.
Yeah. Okay. So this is my last question on this. You mentioned virtual assistants. So this is a strategy that other syndicators may be able to use. Would you maybe advise if someone is a syndicator, maybe to, get another phone number and just text some of your friends and family, say, hey, this is Dan. We have this opportunity. And then, then try to schedule a call on Calendly or whatever scheduler it is. Or even on social media, go into your, say, Facebook account and just start messaging people as though they are you. Would you say that could be a strategy that syndicators could use?
Could it be? Yes. Have I done that? No. I like it. I would definitely do it. I'd probably trust my executive assistant with that more so. But I think that's a great approach to it for sure.
Yeah, just an idea that,
No,
popped into my head. So thought I'd ask because you mentioned virtual assistants. You mentioned all these Zoom calls. I'm like, well, how are you doing it all, Dan? It seems like a lot.
if you would have seen me in Jamaica, I mean, it was really comic. I would just go down to the beach just to show my face, kiss my wife on the forehead, and like I'm going back to work. And I mean, it was beautiful down there, but I was a lot of Zoom calls. But it was fun. It was a great experience. I mean, all the hard stuff that you go through prepares you for the next step. I mean, even the opportunity zone thing where we raised $3.5 million in a few weeks would not have been that easy had we not gone through that tough raise on the first one. I mean, it's all, life happens, for you, not to you.
All right, Dan. So what makes it all worthwhile? I mean, what is it that drives you to even continue building at this point?
It's a good question. It's one I often think about because a lot of people will ask you, and especially where I come from, when's enough enough, right? And I always like to tell people, I have a CFO that works with me, and she's super motivated. She wants to be a billionaire, and I always temper her, and I say, hey, you've got to be happy now, right? Every goal I've ever hit has not changed how happy I am. It's a moment. I give myself a high five. I might go have a beer or whatever and celebrate, but when I go to the mirror, the next day I'm still the same person. So you've got to enjoy the process, and you've got to be happy now. So what drives me is getting smiles on my girls' faces, right? I'm a husband of 17 years at this point. I've been with her over 20 years. Um, we went to college together, we rode together and everything. So seeing her smile still after all these years, 2 decades essentially, is really, I'll do anything for those smiles for her, but also my daughters. I have a 14-year-old daughter in high school. She's a freshman. And I have a 12-year-old daughter in middle school who has Down syndrome. And, getting smiles on those girls' faces is really my goal every single day. And I'll tell you, this business can stress you out, right? And I used to pick up my daughter from daycare, and we'd come home, and you're getting text messages all the time or phone calls. She has this unique ability to just sense whenever you're not right, and she would just look over and say, Daddy, you okay? And you obviously say, Yep, I'm good. She knows, and she'll ask you until you snap out of it. And she still does that to today. And every time I go away, I have to get a snow globe from the different cities that I'm in. She has probably 7 from Texas, so I just get repeat ones and everything. I try to get different ones, but I think she has a couple repeats. But yeah, I mean, ultimately, it's about putting smiles on the girls' faces. I told you my initial goal was to retire with $2 million. Like we've far surpassed that, and where we're going with our life. We set up a special needs trust. You know what I mean? Like someone has to take care of Stephanie whenever we're gone. So we're planning towards that. So we're building the empire to make sure that my girls are taken care of, and my family. Like I want to not even just look at my family. The people that work for me and everything. I want to make all of their lives better. I mean, we do this as a team. But yeah, the family is certainly what drives me, and just making sure they're 2 really different experiences raising my 2 daughters, right? My oldest daughter is beautiful. She's a boxer. She's been boxing for 4 years now, I think. She's got an entrepreneurial spirit. She does some digital marketing, makes digital like QR codes and NFC cards that I carry with me. I don't even carry paper business cards anymore. So we made a video. She's like, paper business cards are so 1980s. And we did a little, snap. She sold over $1,000 of business cards. Like, she gets the NFC cards and programs them, and she loves doing that. And I love making her capable of taking care of herself and not being subscribed to the stuff that, we were all brought up, just go get a good job and go to work every day. So I don't know if she's going to go the entrepreneur route, but she's definitely doing it now. So that's really rewarding for me. And then, Stephanie, that's a different experience altogether. I just want to see her smile. So I need to make sure that she's taken care of. So that does drive me. I want to make sure that there's never a hard day in her life. She's awesome. She does, we just went to her chorus concert this past week, and she sang and she's yelling from the stage, like she's mouthing it to say my name. So I had to yell her name out loud, and she did a little shake. It was pretty funny. And then I just got a text yesterday of her dancing on stage in front of the whole middle school. So she's a blast. I mean, when we had her, we were not expecting her. We were expecting a boy, just because we kind of were in that stage where we had this perfect little daughter. We just thought, we didn't know what sex or gender she was. We're like, probably going to have a boy. We had 4 boys' names picked out, no girls' names. And she came out, she was a girl, and she had Down syndrome. They had to wake me up with smelling salts. Like, I knew it right away. And for 2 weeks, I thought my life was ruined. You know what I mean? Like, I just thought all my goals had vanished away, and it was going to be a rough life. I was so ignorant that I thought she could be a vegetable. I mean, I just didn't know anything about it. Didn't grow up around it. And when she started smiling right away, and like after that 2 weeks, it has been amazing ever since. But she was sent to me for a reason. So that is what drives me.
Yeah, that's huge. So knowing that that's what drives you, how do you create the harmony within the business, driving the business, keeping everything in line, and also making sure that you spend that time and that really your energy with your girls?
Great question. I try to involve them a lot. They don't love coming on job sites anymore, but there's fun stuff that we do. My Stephanie came out where I was decorating my office out in Midland, and she came out with me. So I do bring them with me quite a bit, but I make sure I'm home. This is my 3rd week in a row in travel, which is not normal. But I make sure I'm there, for the evenings, weekends, Friday nights, and weekends. I spend time, and I'm pretty good at being present. I'm a little bit bad on the phone. And my oldest daughter, I asked her, I said, how can I be a better dad? And she's like, yeah, you're on the phone a lot. And I am. But they understand the goals. But I go to the chorus concerts. I go to the boxing matches. There was one day Stephanie had a dance recital, and Bella was boxing in Ohio. Like, I hit both of them. You know what I mean? So you got to work hard at home, just like you do at work for your employees and your investors and your tenants.
Yeah, love that.
We can tell you care a lot, not only about your family, but even from previous discussions about your investors. What do you do within your company to keep your investors happy, but also like manage the risk for them?
So managing the risk is very important. Each deal we get better at it, for sure. Like I said, we went through a little tough time on the first one with how many tenants we've had to kick out and all the capex. It just happens, right? So we fight quite a bit every day to make these assets better, and it's amazing how much progress we've made since then. But risk mitigation is important on the due diligence side of things, and obviously we're way better on the second one than we were the first one. But due diligence is everything, making sure that the financing is structured properly, having the capital stack planned, having good budgets, all that stuff is in play. But also backstopping it with what we're doing. I think I mentioned, like, we sold 40 units last year. I was making myself liquid to make sure that I was strong financially for if I needed to deploy capital to any of the deals. So that's been a big thing. The first deal, this is not a normal thing, but we got that at such a low price for $4.6 million. I paid myself $1 million acquisition fee. I did not go out and buy a Lambo. That was to basically provide capital to the first project. So we have quite a bit of money lent over to that. So I'll do whatever I can for my investors and make sure that their capital safe. It's a long-term investment. So it's the long haul for sure. We're not flipping these things like a single family house. So we're just putting the CapEx in, raising the value of the asset, and making sure that everyone gets the return that we promised.
Cool.
Well, Dan, thanks so much for coming on the Fundication Show. We appreciate you flying in for this, and we look forward to the relationship that we get to build as PREIshare with you going forward.
Absolutely.
And for those of you watching, thanks for joining us again for another episode of the Fundication Show. Please give this video a thumbs up, give it a like, and comment below what you learned from it. And find us on YouTube. We're just searching the search bar on YouTube, PREIshare. You can watch previous episodes that we've posted and other great and valuable content that we have on there. And when you are on our YouTube, make sure that you hit the subscribe button. And we'll see you on another episode of the Fundication Show.